much political capital do you think the government is burning on these proposed changes to the CGT discount and negative gearing?
Well, none on the housing affordability side of things, because when in the budget it was presented all as a housing affordability package. But where the political capital is being burnt is in the fact that it's being extended to business as well as housing. So that seems to be the problem, because it's obviously affects all asset investments, not just property. And business groups are all as one opposing it, demanding that it be confined to housing only. And obviously there's a lot of people saying that really it's a bad idea to put it putting the CGT change onto entrepreneurs because it kind of tends to deaden the dynamism of the economy. So, yeah.
Yeah, so then does that mean that the calculation that the government has made is saying they're willing to burn that political capital on business groups because it's not worth as much as those who are trying to get into the housing market?
I don't really know. I mean, they say, and Jim Chalmers, Treasurer, has been saying that it's all because they don't want to have any distortions. They don't want to have investment decisions prompted by and distorted by tax reasons, which is theoretically correct. I mean, there's nothing wrong with that. Obviously, we don't want that at all. I mean, I would point out that the whole purpose of changing the capital gains tax in the first place in 1999 from being previously the inflation adjustment to the 50% discount was designed to distort investment decisions towards business, in particular shares. That was the purpose of doing it, but it didn't work. It turned out to be a terrible mistake because what it did was nobody wanted to invest in shares. Everyone wants to invest in houses. So the effect of it was to distort investing towards houses. And in the 3 years following that change, house prices in Australia rose 45%. And that really kicked off the whole housing affordability crisis that has been building over 25 years.
I mean, we heard Jim Chalmers just today continuing to sell the proposed tax reform in Brisbane, all about making it fairer for younger people to try and get into the housing market. He did quote the Treasury forecast saying that prices will continue to improve, but albeit at a 2% slower rate than we've seen before. What do you think is going to happen to house prices as a result of this tax reform?
Well, look, the main thing that affects house prices is interest rates. And we've now had, we've had 16 interest rate rises with 3 falls last year. And so the effect of all that is that house prices are now falling in Melbourne and Sydney and in Canberra and in Hobart. We saw that the May house price data came out this morning. And so in those places, house prices are falling now. The rate of growth in the other places, in Brisbane, Adelaide and Perth, is rapidly declining, and they'll be at zero pretty soon. So, and the national median is now at a 0% pace of increase. That was the increase in May, was 0. I think, depending on what happens to interest rates, and there's likely to be another rate hike, I do think now that these tax reforms have happened. Also, immigration is now falling, housing starts are increasing. I think all things considered, we're looking at a long period of house prices not rising at all, which is fine, which is good, which is what we want really for housing affordability. You want house prices not to rise for a while so that incomes can catch up. But there are two sides to that. I mean, obviously, there's a lot of people who have bought a house recently using a lot of debt. And they did that on the understanding that that would enable them to build equity and wealth. And I think that if the governments of Australia, that's not just the federal government, but all the states, if they're successful in improving housing affordability by getting house prices not to rise, all those people who bought houses with a lot of debt are going to be in trouble.
And so that is what you see as the dark side to housing affordability improving?
Of course. I mean, and the trouble is, you can't improve housing affordability while allowing house prices to continue to rise and to be a place to build wealth. It's just, obviously inconsistent. You can't do it. So housing has to stop being the way to build wealth. But the trouble is there's a lot of people, in particular young people, who've recently bought, who are depending on housing as their way to build wealth, you know. And I think, and the thing is that what we have in Australia really is a national consensus now that housing affordability is the priority. We need to fix that. But there's going to be losers out of that, and I think we need to recognise that and understand, and, you know, in some way find a way to help the people who are losers.
Alan, great to speak with you. I really appreciate your time. Thank you.
My pleasure.